Hi everyone. So it is Friday the 19th of June. Oh man, we're just going through this year so fast. So I wanted to, obviously there's so many videos I can do because they're all useful, and I mean, so I'll just do them as I go. But today I'm talking about tools that we can use as traders that can assist us. All right, and so I'm going to be talking about heat maps. Now, there's two ways to look at this. It's two sides of the same coin, but there are two ways to use a heat map. But I believe that the first one that should be mentioned is to help us avoid trading certain charts. Effectively, a heat map will draw your attention visually to where there are strong, I was going to say currents, but strong trends, either bullish or bearish. So I'm using an MT4 platform. For the purposes of this video, I just thought I would do that, and I scoured the web and found a couple of heat map indicators, and I put those both on the chart so that you can see these. Now, I will provide the link if you're interested. I will provide the link below the YouTube channel, so it'll be in the YouTube video in the comment section of that for those indicators if you want. And then you need to save them if you're interested. You need to save them into your indicators folder, which you can access here. They need to be deposited under MQL4 into the indicators folder somewhere there. Don't be afraid to create folders to organize stuff. And then you just need to make sure that you either restart your MT4 platform or you hit refresh. All right, and then you can access them. So I've put both on. I really like this one on the left-hand side. Okay, so the goal of this is to help me identify where there are some strong trends. And so basically it'll organize them in terms of weighting. All right, so for the beginner traders, for newer traders, or for any individuals who are just continually struggling to kind of find their footing to achieve consistent results in trading, the first thing we need to know, which very few people just outright say, I think they think it, the professionals and the seasoned pros know this, they just never really put it into words, but we need to know what is the daily trend. If there is no clear trend on the daily, there is no point really in looking for trading opportunities on the lower time frames. And so most people who are not educated, because this is another thing, whenever you go to a website, because of regulation today, brokers have to put a statement on their website and in their media that, you know, for example, 69% or 78% of customers who use this broker lose money. And the problem with that statement is typically coming out of the FCA, where it doesn't feel like it feels one-sided, is that it gives the impression that that particular broker or brokers in general are just screwing their clients. And here's the thing that you need to be aware of. Brokers don't need to do that because customers screw themselves. Now, I'm not saying that, and this is a big generalization. I think the world today, the industry we're in, the trading industry for us, is the best it's ever been, in my opinion. I think costs are down, software is cheaper. If anything, it's almost all free. The fees are competitive. The regulation is better. It's more transparent. I think all of that has really improved. But also, and I think it is possible. Yeah, in the past, I think absolutely brokers were especially when they B-book clients, which is really to say that they will focus on customers that lose money more often than make money, and they will take a position opposite to that client. So if the client buys, they'll automatically on their books, they'll take the risk onto their books, and they'll either sell the position, or they'll just take it on their books, and they'll usually make the money. But be aware that it's the customer that does it to themselves. If you are a successful trader, that isn't going to be the case with you, right? And so when we hear about those high numbers of customers losing money, almost all of that can be attributed to lack of education on the customer's part. So in other words, they're being taken advantage of, but that's really it's not like you don't know that. You know you need to get educated to do it. So I kind of feel like it's just a great excuse to vilify someone where we do have the ability to come out the winner, but we've decided, no, I'm not going to learn or educate myself. And anyway, I'm on a bit of a sidetrack, but I think it's important to discuss this, and maybe I should do it in a separate video as well. And I'll get to the heat maps because it's relevant to this. All I wanted to do to say on that, to wrap it up, is that that percentage of losses is almost completely due to lack of education on the part of the customers. And it's no different from buying lottery tickets or going into a casino. You're gambling, unlike trading professionally, where it's calculated risk. When you go to a casino, you buy a lottery ticket. It's a gamble because the odds of you winning are very small, and the cost for you to get in can be very low or high depending on you. But it's really up to you. You choose to get in, and you choose to get out. So if you're ultimately losing money, you have to surely take into account that that's you. And all of that really stems from the fact that most customers go in on the lower time frames. So that's how I got sidetracked. I was just going to say, customers don't have the patience, newer traders don't have the patience to look at the higher time frames. They want to get in on the 5 minutes and the 1 minute and the 30 minutes or 50 minutes because that's where they think the action is. And it's not the case at all. So newer traders who are uneducated tend to flow towards the lower time frames, and it's very volatile, and it's not the best time frame for newer traders to trade. You should be trading 4 hour and up for your first 6 months. Anyway, and so that's why you get this volatility, and that's why the market doesn't always do what you think it's going to do, and it changes its mind, it does all these different things. So we should be looking at the daily to assess what the weather conditions are like before we even go down. And if it's too choppy, we shouldn't even trade. So today, as it happens, there's nothing going on in all the markets except with the exception of oils. The indices are looking bullish. Let me show you this. So if I go ahead and I'll throw on the DAX. If we go down even to, say, the 4 hour time frame, they've got a flat level breakup, but they are actually looking somewhat bullish. They're still trending to the upside. Looking here at the FTSE, looking nice and bullish. So if I go down here, immediately down to, say, the 15 minutes, there's going to be some potential entry opportunities on these. Okay, so there will be some potential trading opportunities. And so that's the first thing, is that if the daily isn't trending, there's just no point in looking below the lower time frames. So this is all leading to how we should use the heat map correctly. Okay, so the next thing is the heat maps are generally focused on currencies. So you can, on some platforms, you might get one that will focus on other instruments as well, but we're going to use it for currencies today. All right, and so there are reasons to trade currencies, of course, because they're very liquid, and they're 24 hours a day, and depending on your strategy, they can work really well. So what was the other one? I was just looking at oil. So oil is just looking beautiful. I mean, this is just printing money by comparison. Look at that. That's even better than the indices. So that's where the money is today. In fact, there was literally, I just missed the setup because I was recording the video, but that's actually a long position, and there it goes. And that's probably at least a 1.5 to 1 or 2 to 1, and I've just missed it. Anyway, so the point is, it's okay because I can find other trading opportunities, mainly because I know where to look. So the heat map, this video is for beginners. I'm so sorry about the 5 minute, 10 minute ramble, but you also need to know that. So let's have a look at the heat map here, and let's go through this. So what I'm doing is, first of all, it goes from green, which means that they're very bullish, to red, which means it's very bearish, okay? Which means the beauty of it means that the ones that are heavily darkly colored are almost certainly where the strongest moves are occurring, which means that's where, if I'm a trend-based trader, that's where my money-making opportunities are. The heat map at the bottom for me is the same kind of thing. It'll show you, it's like a grid layout, but this one is just visually very easy for me to go to and have a look at that. Then, for example, dollar yen. All right, it's popular as an instrument because people believe that the Japanese yen is a safe haven currency, and they just do. But you have to understand, dollar yen is junk to trade right now. If I go over to the monthly for dollar yen and just put that on the chart, I want you to take note that there is very little movement on this. All right, it's been largely range bound for many years and does not look set to change. It's looking quite weak at the moment, but it is still largely stuck within a range. If I go down to the lower time frames and zoom out, there is no clear trend, and there's a reason for this. The Japanese central bank, they trade their own currency. So in other words, they work very hard to make sure that the volatility on their own, because they're an export economy predominantly, and the US is one of their biggest partners, they want to make sure that the exchange rate is very much under control. So they're not manipulating it so much as just trading it or other currencies to keep it balanced, which is actually within their purview as far as I'm concerned. If you want to, because that's how we adjust our inflation rate, that's how we adjust in things. South Africa sells gold, buys gold based on that. So it's the same idea. So we don't have to go into the fundamentals too much. But the point is that dollar yen is going to be crap to trade, excuse my language, for the foreseeable future. Meaning that I'll check it, but I don't anticipate that this will offer any real good trending opportunities for the next few years, at least until the economics kind of balance out. So that's to illustrate why when I look at these pale ones, why they're just not that great. When I go and have a look at, so let's go look at this. We've got Aussie Yen, Aussie Kiwi, the Aussie pairs, and we've got GBP pairs, and they look quite bearish. So what I'm going to do here is go down to the 4-hour time frame, and I'm going to I want to zoom out so that we can get a sense of what is going on in this part of the chart. And so let's go ahead and start to look at some of the stronger pairs. Let's throw on Aussie Kiwi. Let's go have a look at that. And what this does immediately, because I can see that it's predominantly Aussie pairs and GBP pairs, that tells me that those are the strongest and weakest pairs. That's where the best opportunities are for today. And today is actually not a great day in terms of currencies. It's a Friday. That's how it is. So let's look at Aussie Kiwi. Okay, so I'll go back down to the 1-hour time frame, and it looks okay. It's trending upwards, but it's not that great. What I'm really looking for is a great, again, like oil, I want a good trend. So let's look at Aussie Yen. Okay, Aussie Yen, let's go down to 30 minutes, 15 minutes. Let's zoom in a little bit. Okay, it's moving. And as I said, today is not great. So there will be days when there's a clear, strong trend. And this is kind of what it looks like at the moment. Let's look at Aussie dollar, US dollar. Let's go to that. So what I can see is they're all trending to the upside. It's predominantly the Australian dollar that's driving this. None of those look really good. I want to look at Euro GBP because the Euro GBP looked pretty good earlier. Nope. So this is a 15-minute time frame, 30 minutes, not that great. Okay, so those to me are not that appealing, but at least I'm looking at pairs that are moving. So now I'm going to head down to the GBP pairs. I'm going to look at Euro Aussie as well. Again, it's an Aussie pair starting to head lower. It's not bad. And then let's look at, say, GBP CAD, Pound CAD. That's good. I mean, here you can see overall it's looking pretty good. It's just not looking great now. But already the chart has, just the price action overall has definitely got a bearish momentum. And then Pound Aussie will finish with that, which is, and then have a look at that. There we go. So here I can go straight down to the 5 minutes, and there's likely to be trending opportunities here. And that's a strong move. So the whole idea with trading obviously is to make sure that we enter a position in the market where the market is actually doing the work for us. We're just piggybacking on it. And so we want to be picking charts that have a very, very strong trend. And that's it. I'm going to leave you with this nearly 13-minute long video. I hope that you found this instructive and useful. And as usual, I always appreciate comments and feedback. If you find the things that I'm talking about obviously helping you in any way to do that, that helps. So this is really there so that if you start out the day and you don't really know what to do, throw on the heat map where you can... I got it from Forex Factory, by the way, is the website. But throw on the heat map, it'll help you at least direct you to charts that you could potentially have a look at and see if there's anything really nice there. But at least you have a chart that's moving, and that should assist in many ways. All right, so there we go. Otherwise, stay safe. Obviously, coronavirus is still, numbers are still growing. Donald Trump is still in office, unbelievably, and he should just be tried for treason. But hopefully that will come in time, and so the world has just gone a little bit batty. So no pun intended. And so have a great weekend, and I will see you in next videos. Thank you.